Hello everyone, Dividend Enjoyer here, and today we're going to do kind of a weekly analysis of my $31,191.52 portfolio. Currently we're up now over $1,000, so $1,142.77 or 3.8%. I have $15.59 in dividends. I believe that's from Prologis, but I could be wrong on that. I'd have to check. But one company has paid me $15.59. So, what I've decided to personally do, and this is just my own personal choice, you guys don't have to do this. Obviously, none of this is financial advice, but what I've decided to do with my dividend income moving forward is that if my amount of cash that I have in my personal checking is high enough, then half of it is going to go back to my checking and half of it is going to be reinvested. This is just to ensure that I'm keeping some kind of higher cash reserves as a result of my dividends. And with any cash flow coming in now, if I'm above a certain amount of cash in my personal checking, half of that is going to go into the portfolio. So that's kind of my methodology. I don't know what your guys' methodology is, but I want to keep enough cash sitting there that I'm ready for an emergency. And I do want to build up my cash pile because you never know when you need it, right? But that was kind of a side tangent. Moving along, we have my first stock, the lowest value in the portfolio, sitting at $1,277.45. Hasbro Inc., ticker symbol HAS. I'm currently up $132.13 or 11.54%. This currently pays me $48.91 annually in dividends. Really like the business, specifically Magic the Gathering. The rest of it is like, okay, I think that the toy business is going to do well, but I really think that Magic the Gathering is very undervalued. And I really am mainly investing just so that I can get a piece of Wizards of the Coast, which Hasbro is the parent company of. Very excited for this company. I think long term it's going to be very good, but I'm specifically watching the Magic the Gathering card market for this stock, and once that starts to turn, that's probably when I'm going to liquidate this position. I think if we continue to have a bull market, which with the Final Fantasy drop, it looks like that's going to continue to happen. I think that their Universes Beyond is very smart, and overall, I think that Hasbro is worth looking into, especially from, just it being at historical lows. I mean, you couldn't get Hasbro for this price pre-COVID. It's been definitely slipping the last couple of years, and that has really been mainly due to the fact that Magic the Gathering had such a bear market and was so undesirable for so long because they overprinted, and that was their cash cow at Hasbro because that's really where the value is in Wizards of the Coast and Magic the Gathering. And when the card market was bad, it really hurt Hasbro's bottom line. But now it seems like they're limiting the amount that they're printing, and I think that Hasbro's going to be in really good shape going forward. Next up, we have Meta, ticker symbol Meta. I'm up $348.68. I believe I'm up the most on a percentage basis, second most as a dollar basis on the stock, up a whopping 31.14%, which is really unbelievable when you consider that this position I didn't really start even until February or January. And I haven't even been trading in this portfolio pretty much. I started it in September is when I started it, and I started putting money in. So it's amazing to me that I have a stock that's up 31.14% from where I bought in such a short period of time. So I really think that the market's kind of turned around. I really want to say, too, that just bigger picture, and I don't know who's even at this point in the video or who even cares, so this is another little side tangent. But I really think that tech is starting to turn around and come back up. I think that we're going to see people sit on the sidelines, and then once they see it coming up, more people are going to want to get in. I was talking about tech, I was buying tech, and I was telling everyone, I really think this is undervalued. I think that this AI thing is going to be big. I also really just looked at it and saw that these stocks were so desirable for so long, and the margin's great. They're great businesses. They're able to grow very well. And once people started to sell off, that's when I really, got in. I've obviously went crazy with, my biggest positions being Salesforce. Vici's a REIT, but Amazon, American Express, we got Apple, Meta. Like, I really have had a lot of tech companies that I've been holding. I sold out of my Microsoft, made 10% on it. And I really think that you're going to want to hold here. And I also think we're not coming back down, folks. Meta is a perfect example of that. Up 31% is insane. I think that tech is completely going to rally. And the next stock I want to talk about too that I think is really being overlooked and that I'm going to continually add is Apple. And I'm personally going to continually add Apple as long as it's 210 or below. I really think that this is a good opportunity right here. I think that you're getting a very strong business, and I think that people really underestimate Apple, and it's these sort of times when you want to be an Apple investor. It's not the times where Apple's always going up and everything's good. You want to get in when it's very cheap historically, because people were buying this stock for over $260 this year, and now it's trading for $201.08. I think that 210 or below, it's a very good deal because they do a lot of buybacks. I don't think that the growth is great. I've been very critical about Apple for a very long time on this channel, and now I'm changing my opinion on it because it's cheap enough to justify buying here. I think that realistically, Apple's probably worth around 220, 230, maybe a little bit more. And, I sold out in the 260s, but 201 I think is a fair deal. I think that if you go by a DCF or something like that, you're going to get a value for Apple around 140. But I think you have to have I think you have to have some kind of premium for the size of the business, the monopolistic nature of it, the iOS ecosystem, and now is the time to get greedy when so many others are fearful. I don't think that this is a dud company. But I'm up $22.66 on it so far, or 1.43%. But I just really wanted to go into that because I'm telling you guys, I'm going to be continuing to buy this as long as it's below 210. I want to continue to hold it. I don't want to be, cautious about this. I want to really jump on this opportunity while it's here. I think that it's a good opportunity. I could be wrong. I've been wrong before. But I also want to have a business that's not investing as much money into the AI side because Apple's going to have a lot of cash. I think that they're very intelligent. I think that they're doing the right things. As a business, they're trying to integrate the things that are going to be the most positive for their customers. And I think that they're just a wonderful business that I want to own for the long term, and I want to own at this price. Next up, we have Prologis, ticker symbol PLD. This is a triple net real estate investment trust. Specifically, warehouse space is what they're built around. And triple net REITs essentially pass off most of the risk of the property and the cost of the property onto the tenant. And essentially, they just own a bunch of warehouses, and their tenants pay the taxes, they pay the maintenance, anything that goes wrong within reason for the building they're paying for. And I think that Prologis is going to see a lot of growth into the future. As we have logistical systems getting more complex and smarter, I think that the need for space is going to be there, especially with all these growth giants like Amazon building as much as they are. A lot of these big tech companies expanding. I think that they're going to need this space. I also think that just any logistics companies are going to need this space, and you're going to see more logistics companies continue to sprout up. I think that's the way it's trending. So I'm up $18.9 on this, or 1.15%. Overall, pretty much flat on this stock. Very happy with it, though. $63 annually in dividend income that I just am able to collect. I think that's what the payment was for. And overall, I think just a very solid company. I'm not really adding any more right now. I think below $100, you're getting a really good deal. I think even 105.6, you're getting a decent deal. I just think I'd rather be invested into Apple right now at this price because You never know with Apple where it's going to be, and it's a very high quality business, and I really like the fundamentals of the business. Next up, we have TXRH, our Texas Roadhouse. Um, I really love this business. I think that it has a lot of growth. I really love that I'm invested into this position because I think that this is a very aggressive position with a lot of potential to it. And it's kind of outside of what I would normally invest in because I normally don't like restaurants, specifically just because I think that there's not a lot of growth in big fast food companies. I'm not usually a fan of riskier companies, but their balance sheet's very solid. They continue to make good gains. They continue to open new restaurants, and that's what you care about if you're owning the stock. Next up, we have Waste Management, ticker symbol WM. This stock is up $105.10 or 3.92%. Currently have $40.26 that this stock pays me. Very happy with this business. I'm also adding some of this, full disclosure. I think that Waste Management right now is a very good company. And, I really was kind of thinking about it in a kind of abstract way. I just kind of thought that it would be really good to have $10,000 in Waste Management so that if I ever got into a pickle, I could just pull the money. Because I'd be willing to bet a lot of money that in the next 5 years, Waste Management is going to be either at or above the value per share that it's trading at today. And I think if you're not in any kind of hurry and you're looking for kind of just a safe place to park your cash while things are going on, I think that Waste Management's an excellent company. You are paying a premium, but it's an amazing business that's completely for the most part, recession-proof, very defensive. I love this business. I love the idea of owning this business for the long term. I love that it pays good dividends. Dividends have, I believe, around an 8% 5-year compound annual growth rate. Could be off by that. It could be 7, but I believe it's in that ballpark, and I think that the company is very strong financially, and I think that they're in a position to continue to grow into the future. Next up, we have American Express Company, ticker symbol AXP. I'm currently up $361.12 on this, or 14.02%. I just realized that this is actually the company that is in second place for the highest total gain in terms of dollars and in terms of percentage. I currently get paid about $30.36 annually in dividends from the stock. And I was talking about it for a long time, and the opportunity was there for a very long time. And I said that anything under 300, in my opinion, was a pretty fair deal, pretty good deal, actually. I was picking up some shares all over the place. I think around 300 is the most I've paid. I'd have to check on that, but I believe that's around ballpark. But I'm estimating that this is going to be back in the 330s eventually. I think that American Express is a very compelling company to own, and I would say that there are a lot of reasons to want to be an investor in American Express. If you just look at the historical revenue, for the most part, it's very much been trending up. You do have some anomalies, like I believe 2008, 2009 are kind of bad because obviously they make their money based on the amount of transactions that are happening, and when you have less transactions because there's less money, it's going to hurt their business. But I'm very happy with having close to 3,000 now in American Express, and I have no interest in ever selling this. I think that this is one of the quintessential just perfect businesses, but the issue is it's very similar like Apple, to where you don't always have the opportunity to buy it at a price that makes sense. That's the only real downside of American Express, that there is a premium with this company, but I think that the growth is there. I think that the quality is there, and I think that we're going to continue to just see a dramatic increase in transactions through American Express. And as well, I think that they're really capturing Gen Z. I think that they have the stranglehold on Gen Z, honestly, going forward, and millennials. They already have a stronger more richer customer for sure, a wealthier customer on average, and you can see the network effects that as people join in, they're able to offer better perks for the credit card. So I think that this is a very good business that you should want to be in. Whether, and again, you could pick and choose MasterCard, American Express, Visa. I think that they're all wonderful businesses and worth checking out for sure. I think that the business is very strong. Next up, we have Amazon, ticker symbol AMZN. This was a company I was adding a ton to when it was at 200. And I talked about it and I said, nobody's going to want to buy it right here at 200. People are going to want to buy it once it hits the 240s again. And lo and behold, we're already chugging up to 223. I think we're going to hit the 240s eventually. I'm up $373 or 9.34% for a total value of $4,374.19. Amazon's the only business that doesn't pay a dividend. And even though my channel name is Dividend Enjoyer, I'm completely fine with this. I think that Amazon is one of the most intelligent companies at allocating capital towards things that are going to grow the business. I've talked about it at length that I think that Amazon is developing the future technologies that are going to be worth ridiculous amounts of money going forward. I think that they have crazy advantages in their businesses. I think that they're a very strong business. But what I've really talked about and what's really revolutionary about Amazon and is very similar to Microsoft, but I actually think that Amazon's business is better in a lot of ways because it's much harder to compete with than Microsoft's, is that they have a cash cow business. For Amazon, it happens to be the logistical network that they've set up. And for Microsoft, it happens to be the Microsoft Office suite or the, Windows operating system as well. And Windows is a little harder to replace. I know that you have Mac and Linux and things like that, but it's arbitrary, right? My point is that they have these cash cow businesses that fund everything and bring in a lot of money and keep their balance sheet good and keeps everything going. But then they're able to take that massive amount of money and throw it at all these different things for growth. You see Amazon has Whole Foods, they have Twitch, they have AWS, they have Prime Video, they're doing the NFL stuff. I mean, there's so many things that Amazon has their hand in. And the reason is from the business model. I mean, you have the logistical network bringing in all that money, and they're able to just throw that money back into other things. And they don't pay a dividend for that reason because management and I, as an investor, believe that Amazon is able to stretch each dollar that comes in into more dollars as a result. They're able to essentially increase the equity more by reinvesting into various businesses than they would by giving it to you. So if there's $5 that they could pay you in a dividend, let's say they put that $5 per share back into buying a certain AI thing that they think is going to make them more money, or data centers or things like that they're going to need that are worth buying now and they need the cash for it. Or not necessarily need, but it makes sense for the business. I would rather have them spend it back into the business, grow the cash flows more, and just make the business more valuable as a whole. Now that we're through that tangent, let's talk about Vici, ticker symbol Vici. Currently up $133.59 or 2.37%. I've gotten paid dividends as well on this. This is my highest dividend payer. Currently pays me $309.01 per year. I'd like to get that up to $365, so it's just paying me $1 a day guaranteed. But I would really like to get Vici again below 30. I don't think it's going to happen. I think that we're actually at a fair price. I think anything from 32 to 34 completely justified, especially if you're going to be a long-term holder. I think this is a very good company. Obviously, otherwise I wouldn't have $5,765 in shares, right? So this is a triple net real estate investment trust that owns almost half. I think it's 1.6 out of 4 miles of the Las Vegas Strip. And again, guys, if I get any of these numbers wrong, I'm sorry. I'm just a regular guy in a basement somewhere making YouTube videos. I'm not a professional, right? But I believe Vici has about 1.6 miles of physical casino real estate. They do not run them. They do not get to be an operator. They just charge the operators rent for the physical locations, but the operators cover all the costs and all of that type of stuff. And Vici just sits back. As long as casinos don't default, they're able to make money. And then once they have that money, they're able to buy more properties. They have a lot of golf courses, things like that, resorts. I know they were in talks to try to acquire some kind of building for the NFL. But yeah, I don't know. I really like Vici. I think it's a very strong business. I think that it's worth between 32 to 34 objectively, maybe 35. I mean, I've done different models of it. There's not a ton of growth. It's pretty predictable on what you're going to get. But I think it's a very strong business. And I think it was just created because there was a very weird time with COVID where, a lot of those casinos were struggling because people weren't physically coming in. I don't think we're going to have another event like that causes casinos to be struggling for cash. I think that we're actually really seeing kind of the opposite thing happening, which is interesting. So maybe this is a reason to invest in Vici and a thing I should make in a video. But I think we're seeing an uptrend in the acceptance of gambling and spending money on gambling. And I think that Vici is probably the safest bet to take with that because owning the physical casinos is probably much safer than betting on any of the individual casinos to win big. I think that just taking the safe bet is the better one usually. It's the type of guy I am, if you can't tell by the portfolio. And I really like Vici. I think it's, very good company, very strong. And finally, we have my biggest investment and the one that's down the most, Salesforce. Ticker symbol CRM. Currently, it has a value of $6,882.57. That's my position. I'm down $396 on that, or 5.45%. I think that it's an excellent opportunity to get in. I think that we're going to see that Salesforce succeeds in eliminating call center jobs from India with their AI agents. I think we're also going to see that Salesforce is inevitably going to continue to grow just by the nature of their business. Companies that are using Salesforce aren't going to be able to stop. And as they continue to grow, Salesforce will continue to grow with them. And as new companies join in, they're not going to be able to leave. And as they grow, Salesforce will also grow. So you just have the companies that are there staying, which they will, and then the new companies coming in and they're going to stay. So Salesforce is going to continue to grow. I'm very bullish on Salesforce. I think that they're a very intelligent company. I think that they're a very niche company. Not a lot of people really understand what Salesforce is about, and I think that they are extremely undervalued in terms of where they're at. So that's kind of the wrap up on my overall portfolio. I hope you guys enjoyed the video. Please check out some of my other videos. I intend to post a lot more content next month, and I feel very, very strong about that, and I really want to grow this channel. So thank you guys for watching and coming along for this ride. I really appreciate it. Bye.